Hey, it's Tom here and welcome back to the channel. Now, a question that I get from time to time is basically how do I go about reading a company's financial reports and investor presentations, whether it's a 10K annual report or a 10Q quarterly report for either a brand new company or a company that I maybe already have in my portfolio. What are the key things that I tend to look at to try to understand how the business is performing and how it's set up to do kind of moving forward. I think the answer to those questions can vary a little bit from business to business, and frankly I think it's easiest just to work through that process with one particular company and kind of show you an example of what I actually look at. And one of the companies in my portfolio actually just reported earnings last night. It's actually, besides a little New Zealand top 50 ETF holding that I have, this is actually the stock I've owned the longest. It's a company called Thor Industries. I've owned it almost exactly 3 years. I think I bought it on the 4th of December 2018, which is a date that just sticks with me because that happens to be my birthday. So we've just ticked over kind of 3 years since I've bought Thor, and I haven't added to the position. I haven't trimmed the position at all. I kind of just did that one purchase a few years ago and have kind of held it ever since. And yeah, like I say, they just reported earnings last night. And in this video, I basically want to walk through the investor presentation, which is something that I always like to focus on with Thor in particular because it has some very useful data around how we should think about the current business performance and what to expect over the next few quarters. And I'll also look through some management commentary and the balance sheet of the company to give you some thoughts on that and kind of the key things that I'm looking at. And as always, anytime we're looking at an individual company, this isn't a recommendation to buy or sell or hold or anything like that. Always do your own due diligence, and this is kind of just to give you a feel for some of the things that I personally look at when I'm trying to understand how a company is performing. And the other thing I should also say is that we really shouldn't read too much into quarterly updates. Typically when I'm doing an analysis of a company for investment, I'm trying to figure out, what do I think the cash flows of this business are likely to be over the next 5 or 10 years. Granted, it is hard to, the further out into the future you get, the harder it is to kind of project cash flows and so on, but that's what I'm really trying to understand. So we don't want to get too caught up in quarter to quarter results, particularly for a company like Thor Industries, which is a cyclical business. So it goes through highs and lows, and this quarter happens to be a really significant high. It's, a record quarter for the company, but again, we've got to take these things with a grain of salt and try to figure out how this particular quarterly update fits into the long-term kind of situation that Thor finds itself in. So with all that said, let's jump over to the investor presentation. If you do enjoy the video, be sure to hit like and also subscribe, and let me know what you think of this type of content. If you want to see more of these types of videos, let me know down in the comment section below, and I'm happy to make more of them. So with that said, let's get straight into the investor presentation and kind of walk through some of my highlights. Okay, so the very first slide here for Thor is actually quite a telling one. This is probably my favorite slide that they put in every investor presentation because it gives us some initial kind of financial highlights for the business. What was their revenue, their gross margin percentage, and how much did they earn per share. And it also gives us their backlog and dealer inventories, which I'll talk to in a sec. And those are the real kind of key two things that I like to keep an eye on with Thor to figure out what they're likely to do in coming quarters. So if you don't know already, Thor is basically a RV or a motorhome if you're in New Zealand, slash trailer and a caravan if you're in New Zealand, wholesaler. So they produce RVs, motorhomes, caravans, towables, whatever you want to call them, and they sell them to dealers. So they don't own the dealers, they own a range of different kind of RV brands. They produce those vehicles, sell them to the dealers, wholesale, that sort of thing. And over time, they've acquired a lot of other brands, so there is a little bit of organic growth that kind of happens in this industry. Later in this presentation, I'll kind of show you those numbers, but they're very modest growth rates. We're talking probably growing about the rate of inflation, maybe a little bit higher than inflation. So in order to grow a little faster, Thor has acquired brands and acquired businesses over time, and the way that they really manage their business is quite decentralized. It's a little bit kind of Berkshire Hathaway-esque, where you've got Warren Buffett just sitting in Omaha letting all his operating businesses do their things with their own managers, and they send the cash to Omaha each year. It's a little bit like that with Thor. Many of the brands basically operate independent of Thor and independent of one another, and to a large extent they actually compete with each other as well. And you have not a lot of kind of centralized procedures or anything like that. There are some things that are done for sort of the greater good that are centralized, like electrification initiatives and that sort of thing, but largely the businesses are left to kind of run their own lives. So let's get into some of the highlights. Now, net sales came in at 3.96 billion, up 56% for Thor. Crazy good quarter in terms of revenue growth. Gross margin was up a little bit as well, so up 170 basis points to 16.6%. And earnings per share, again, up through the roof, $4.34 for the quarter, up 112%. And those are basically all records for Thor. Now, the breakdown in revenue, you can see here. I won't speak too much to that. The bit I really want to focus on here is basically what's driving all of these record sales and phenomenal quarters that we've been seeing out of Thor recently. And it's basically that demand is just through the roof. If you look at the dealer inventories in that top sort of little line graph, you'll see that compared to previous years, dealer inventories are extremely low. So you've got dealers, basically getting RVs, selling them immediately, and having kind of nothing left to sell. So they're putting in a whole bunch of new orders with Thor, their provider of vehicles that they can then go on and sell to the end customer as a dealer. And as a result, you've got really low dealer inventories, and you've got an enormous backlog of orders. So in previous years, like 2017, 18, 19, you'll see that dealer inventories were anywhere from at the low in kind of 2018, when dealers had quite a lot of inventory and there wasn't a lot of order backlogs and orders waiting to be filled. The backlog was maybe 1.7 billion, something like that, in 2018. And in 2017 and 2019, it was maybe closer to sort of 3 billion, very roughly. But the backlog has certainly shot up a huge amount recently. And as of the 31st of October 2021, it was $18 billion. And that is just crazy. That is actually a further jump up again from a record backlog that we saw last quarter. I'll try and put those numbers up on the screen here. And, if we look at Thor's total annual revenue over the past few years, they've been trucking along in and around about $8 billion in total revenue for the year. For the financial year that they just finished, that shot all the way up to about 12 billion, so it grew about 50%. And you have a backlog of $18 billion. So that's about a year and a half worth of record revenue. So pretty crazy to see that massive of a backlog for Thor Industries. And in the management commentary, which we'll look at in a sec, they are thinking that it's going to really take some time, maybe a year or more, to kind of work through that full backlog. So the way I kind of view this is that this tells us that the next few quarters for Thor are probably going to be looking fairly rosy still, all going well with supply chain issues and all that sort of stuff. They've got a lot of orders that need to be filled, and there's still huge demand for their products coming from, I guess, the end users eventually, but from the dealers that Thor works very closely with. Okay, so getting into the individual segments now. So North American towable segment, net sales up 61%. And they've given a bit of kind of commentary on that here. So primarily due to an increase in unit shipments, changes in product mix, and selective net selling price increases to offset known and anticipated material cost increases. So I think this has been kind of the one of the big concerns, for shorter term type investors with Thor, is basically increasing material costs, getting in parts and materials and so on to basically build their RVs. But we've kind of continued to see that Thor are not having a whole lot of trouble actually passing those extra costs onto their customers. So we saw that reflected in the higher revenue because they're selling their product at a higher price. And we actually also saw a greater margin. So even though they have got an increase in some of the raw material costs and some of the costs for parts and so on in their business, they're able to pass on that full cost and more to the customer. So we saw that reflected in gross profit margin grew from 15.8% to 18.2% for the North American towable segment. And again, just like across the broader business, the backlog is up very significantly as well. And I won't go through this in too much more detail here, but we largely see the same trends across a lot of their other segments. So North American motorized segment, we saw very similar results. European segment was a little more lackluster, I guess. So increased net sales 5%, so we're still up kind of year over year, but nowhere near as significantly as the American business. And gross margin was actually down, so decreased 130 basis points, primarily due to additional labor and overhead costs incurred to support planned production levels, which were negatively impacted by chassis shortages in the current year quarter. But again, backlog for the European business up 45%. Okay, so far it's all looking pretty rosy for Thor, but like I say, it's a cyclical business, so we can't really focus too much on one particular quarter, although it does look pretty impressive so far. But there are kind of a couple of things that I am keeping an eye on. So the first one is actually a couple of recent acquisitions. So like I said, Thor have historically just acquired a lot of brands where it kind of made sense over time with RVs and motorhomes and so on. But more recently, they've actually been starting to acquire a few parts businesses, which is something that I really don't know a huge amount about the economics of those businesses, and that's something I want to try and learn more about. So we've got kind of a couple of updates on that recently. So they've said in this press release that they've acquired a business called AirXL. I believe we've seen a press release on this already, so this was done on the 1st of September 2021. And just yesterday, actually, so the day before this earnings release came out, they actually put out another press release saying that they've acquired outboard polypropylene, so another kind of parts business that is coming into the Thor family, and there weren't a lot of terms kind of disclosed about that particular deal. So those are a couple of things that I'm going to be keeping an eye on. I don't really know the economics of parts businesses all that well, other than from some of the parts businesses that I saw in my Fiat Chrysler investment when I was invested in that business. And from what I saw with Fiat Chrysler, they're really not that great of businesses. So this is something that I'm definitely going to be keeping an eye on moving forward, trying to understand what the economics of these parts makers are kind of like for Thor. Okay, and to finish up kind of this investor presentation part of this video, there are a few sort of macro RV industry things that Thor always puts in their presentation, which are just interesting to kind of keep an eye on. The first one is around market share. So if we compare their towables and motorized, we can compare 2020 versus 2021. So in the towables, Thor had a 41.9% market share last year. That's down slightly to 41% for 2021, although the units are up very significantly for that market. And in motorized, it's looking much better. So in 2020, we saw a market share of 38.3%. That's grown quite significantly to 47.6%. Now, you do have to keep in mind with these market share things that, Thor does acquire businesses over time, and they've recently made an acquisition of more of a luxury RV company called THO. So those kind of changes where they're kind of eating up all these other brands are obviously going to flow through into their market share numbers as well. Thor also give us a quick overview of growth in RV shipments, more generally, and we can see, like I said, I think earlier in the video, it's growing roughly around the rate of inflation over the long term, so not too much to read into there, but the big kind of final slide I always pay attention to is capital management. So firstly, we basically get to see the free cash flow Thor is generating, so we can see net cash from operations and also CapEx. So if you take cash from operations and subtract capital expenditure, that will give you free cash flow, and we've seen how that's kind of grown and gone through the cycles over the past 10-15 years in this example. And we also see the cash priorities, which they list in basically every investor presentation. So invest in Thor's business, pay a dividend that they've actually just bumped up a little bit, reduce the company's debt obligations, and then look at basically acquisition opportunities. Okay, so that is the investor presentation, and that is really where I spend most of my time with this particular company, just trying to get a feel for what's going on. But there are two other areas that I like to have a look at. So we'll look at the financial statements, which obviously are very important. In particular, in this video, we will look at the balance sheet and some things happening around debt that I'm kind of just wanting to keep an eye on as well. And the other one is management commentary. So let's maybe start with that. So the CEO of Thor is Bob Martin. He's been the CEO for quite a few years now, and he seems to have kind of a long-term, growth mindset, and I kind of like what Bob's up to. So this is what Bob Martin, the CEO, had to say about the quarter for Thor. So building on our record-setting fiscal 2021, Thor delivered yet another quarter of strong financial results to begin our 2022 fiscal year. It seems the market focuses on the supply chain and labour shortages that our industry is facing right now more than it does our performance in the face of those challenges. But our performance has been consistent despite those challenges. Through outstanding operational execution, our teams continue to successfully navigate through these challenges at record levels. In the quarter, we delivered over 88,100 units, outpacing the RV industry's growth rate of shipments. Our first quarter performance, which marks a third consecutive quarter of record net sales and diluted earnings per share, is a testament to the experience, flexibility, and agility of our operating teams and their drive to meet the needs of our customers in a difficult and dynamic business environment. Independent dealer sentiment remains positive and consumer demand for our RV products remains strong. In the first quarter, our global order backlog increased to more than $18 billion, reaffirming our view that the dealer restocking process will take a number of quarters to complete and could possibly extend into calendar 2023. The strategic course we have set gives us many reasons to remain confident and optimistic about our future performance as well. Our acquisition of AirXL in the first quarter is a manifestation of our bullish outlook for our industry and for Thor in particular. This acquisition is a key piece of our strategic positioning of the company as we seek to strengthen our supply chain. The AirXL integration has gone exceedingly well, and we continue to see a great opportunity for growth through innovation, additional product offerings, and the aftermarket business. And there are kind of a couple of other bits of management commentary dotted throughout this press release. I won't read all of it, but one of the bits that I did see was actually around the debt, and I've seen a few other SEC filings kind of hit my inbox over the quarter with various changes that Thor has made to their debt. So they said during the first quarter of fiscal 22, we issued $500 million of senior unsecured notes and expanded our ABL borrowing capacity to $1 billion. These transactions not only enhanced our liquidity and extended our debt maturities, but also secures access to long-term financing at attractive rates and provided funding for our acquisition of AirXL. At the end of the first fiscal quarter, we had liquidity of over $1 billion, including approximately $336 million in cash on hand and approximately $810 million available under our ABL, providing significant financial flexibility moving forward as we continue to execute our long-term strategic plan through prudent and thoughtful capital deployment. And that is from Colleen Zuhl, I think her name is pronounced, from who is the CFO at Thor. Now, on that debt, there is a couple of things that I just wanted to take a look at to see kind of how much that did move the needle for Thor Industries. So I've jumped over now to their 10Q, their quarterly filing, and obviously one of the financial statements we will see there is their balance sheet. And there's kind of a couple of changes that sort of jump out to me a little bit in terms of the balance sheet for Thor. Overall, they're still producing a lot of cash, and it's clearly very healthy. But over the past quarters and couple of years, we've really seen them being actually paying down debt quite aggressively. They made a big acquisition in the Erwin-Heimer Group, and that trend of paying down debt has actually reversed this quarter, and they mentioned that in their press release about issuing some new debt. Now, I suspect this is kind of a short-term move just to push out some debt maturities and get financing at lower rates, and I imagine they will start to pay down debt again, in the quarters to come. But again, it's just kind of one to keep an eye on. So a couple of things that I saw. So if we look at inventories, that's jumped from about 1.37 billion to about 1.67 billion from July to October. Now, I think in the context of Thor's business, that's probably understandable. They are growing and producing vehicles at kind of record rates, so it's likely that there's going to be more working capital kind of in the business. So I think that's what we're seeing show up in inventories. But the big one here is around long-term debt. So we've seen that jump from about 1.6 billion to about $2.2 billion. So certainly one to keep an eye on, but I always, when it comes to debt, like to look at some of the finer details. It's not really as simple as just saying, debt's gone up, we have to pay attention to when a debt payment's actually due and how expensive is that debt, what kind of interest rates are they actually paying on it. So if we continue scrolling through the 10Q and go to the debt maturity section, we will see quite a bit of info on those finer details for Thor's debt. Now, if we look at the debt structure here for Thor, we will see that the term loan is really unchanged. It's actually come down a little bit, and we see those couple of increases in debt like was mentioned in the commentary from the CFO. So we see the asset-based credit facility about $160 million, and we see $500 million issued in secured notes. Now, if we go down to the commentary just below that, we can start to get a feel for interest rates and how expensive that debt is, and I'll put that up on the screen here. And it's always a little mind-blowing to me exactly how cheap this debt is for Thor. It's kind of unbelievable, frankly, and I think some of that has to do with having a European business and being able to issue debt in euros. So I'll put that up on the screen here, but nothing concerning really in terms of how expensive that debt is for Thor. It's actually remarkably cheap. And if we scroll down finally to look at when debt payments are actually due, we've got a little bit due kind of each and every year that's laid out here, but they're relatively small amounts. So it's anywhere from sort of $10 to $30 million over the next few years. And the big payment is due in 2026 of about $1.7 billion. So that's kind of their big term loan facility, and there's also a few of the other kind of smaller debt obligations flowing through there. So that's really all I have for this video. That's kind of my quick summary highlights of the latest quarter from Thor Industries. Again, this isn't meant to be like a pitch for Thor or anything like that. It's really to try and give you a feel for some of the key things that I focus on, and hopefully you can see that this might vary quite a bit business to business. With Thor and following it for a few years, I've got a reasonably clear picture of the things that are likely to drive earnings and cash flows over the next few quarters, with the backlog, the dealer inventory and so on really being the big ones, and keeping an eye on margins of course as well, and whether they're able to pass on some of these increased costs to their customers. And of course the big one, anytime you've got debt in a company, is to pay super close attention to what's going on with debt. Even if you have a great business, if it's over leveraged and can't meet its debt obligations, that can obviously ruin an investment. So that's one to keep a pretty close eye on as well. But that's it from me for this one. I do hope you enjoyed the video. If you did, please hit like and hit subscribe, and I will see you in the next one. Cheers.